talking about all things acquisitions just a few moments ago with Sam Huber from Infinite Reality, who've taken on, of course, Napster in that $207 million deal. And if luck would have it, I've now got the good team from Marsh in front of me. And for why? Because Marsh had just released their Transactional Risk Insurance 2024 Year in Review report. It provides a comprehensive overview, if you like, of the transactional risk insurance market across all geographic regions, setting the stage for what to expect for the rest of this year and beyond. And of course, it always begs the question of how are we doing here in the region? Well, the man to tell us that is the head of Transactional Risk Middle East and Africa, Luke Sutton. Luke's based here in the United Arab Emirates, has been with Marsh since 2019, and he joins us live in studio. Great to have you with us, Luke. Good morning.
Good morning. Thanks for having me.
So let's do. We haven't got time to get through the entire world at the moment, but let's be selfish if we can, and focus on the GCC. What are the key findings from the GCC area?
Absolutely, Tom. So I think just in a nutshell, it's been a very robust year last year for M&A activity. We talk about the GCC region. We're talking about acquisitions here, so not outbound acquisitions from players here. Acquisition of targets and businesses in the region, both by domestic players and international players looking to invest in the region, which is increasingly a feature of the M&A market here as regulation shifts and evolves, and we see a real concerted effort to attract that investment. So last year, in dollar terms, we're talking about $34 billion of closed M&A activity for the GCC. That, in global sense, is still sort of relatively a small portion of the overall, I think, $3.4 trillion, so really around 1% of the global deal flow. But it's important to sort of couch and frame our report against the global M&A backdrop. 23 was a 10-year low for activity, both in terms of volume and in terms of deal value. Last year, I think it's fair to term it a modest recovery on that activity. It was principally led by the US, so the US was sort of going gangbusters last year in terms of the deals they were getting done, and some of those deals, it must be said, were from sovereigns, from corporates, from private capital in the region investing into the US. So we tend to see the rest of the world, in my experience, follow 6 to 12 months behind the US in terms of that activity, but notwithstanding that, GCC remained a bright spot, and we saw a very, very healthy activity across the value chain.
So that's the GCC, that's the region as a whole, getting the thumbs up. What about the UAE within the GCC?
Absolutely. So it is the standout contributor to those numbers. So 19.6 billion, so comfortably over half of the GCC deal value number attributable to the UAE. We've seen it's a very well hedged environment for deals. There's a lot of good businesses out there. There's lots of good founders out there bringing businesses to market. There's a burgeoning, growing community of very active private capital funds. It's not all sovereigns. There's a nice collaboration, strategic partnership between the private and the public for some of these transactions. And as I've mentioned already, attracting that external investment into the UAE. So technology stands out as one of the key sector areas. Beyond that, you've got industrials, business services, and healthcare. Renewable energy is always there. The drive towards energy transition and more renewable and clean sources of energy to power the AI revolution, the large language models, and you look at what's happening with data centers popping up everywhere for those cooling properties to support some of that growth.
What that inbound investment and the interest that the region is generating at the moment, what does that tell you from a data perspective?
It tells us that it's a good place to invest. There's confidence. Investors globally are confident in the region. They see a clear vision, a government-sponsored vision in terms of attracting that activity. You look at what's happening in the DIFC. Nearly on a weekly or monthly basis, we're seeing a new, typically US or certainly international private equity fund opening an office in the DIFC. So I think for me, it talks about come and invest here, invest your capital here. It's a good place to do that, to grow businesses, and ultimately, if you're private capital, a good place to exit as well. We're seeing a lot of IPOs in addition to pure, disposals on exit. So the opportunity to exit, to realise some of those returns is very much there in the UAE.
A lot of that is based on reputation. And again, big companies, internationals, foreign investment coming in and wanting to know that their investments are protected in some way. And that comes back to insurance and the better understanding of mergers and acquisitions, M&A insurance as well. Has there been an uptick in demand for that and a better understanding of it?
Absolutely. So it's important to say that this transactional risk suite of insurances and advisory services that Marsh provide, we do more of it than anyone else. So we have this unique vantage point that at some point in a transaction, invariably buyer and or seller is thinking about, do we take this, do we not take it? So we see an awful lot of that inquiry rate and flowing through to successful policy inceptions. In terms of the picture in the UAE, with that inbound investment brings a way of transacting, a sophistication, a methodology of transacting. And these risk management tools are staples, frankly. If you look at that $3.4 trillion of global activity last year and you think what percentage of that deal base was insured, we say approximately 20% if we overlay our figures with and certainly Marsh worked on 20% of those deals from an insurance placement perspective. When you see more international investors investing into the UAE, they expect to see these features. For sellers, it's about clean exit, highly liquid sale proceeds on exit, so they can reinvest, go on to the next thing, cap their liability. For buyers, it's about having a backstop, not having to pursue sellers, founders, management teams for risks, for issues that come to light post-closing. So it's definitely an evolving picture. We've seen a 77% increase in inquiry rates from the GCC over the last 2 years.
And just finally, we know that school's out for the spring break at the moment. A lot of people are away, so end-of-term reports as well. It looks like the end-of-term report is really good in this particular area at the moment. But as you've said, this is a document, this is a review that sets the stage for what to expect in 2025. I don't want to put you on the spot, but I've got about 30 seconds, more of the same for this year?
I think even rosier picture this year would be my estimation. Yes, there's uncertainty. There's macro issues that will flow through in terms of investor confidence, but we see a lag between the deals getting going and closing, and our pipeline, our line of sight says it will be another good year.
Luke, really appreciate all the hard work on the report itself, you and your team. Thanks very much indeed for joining us as well. Enjoy the long weekend, whatever you get up to, and thanks for joining us live in studio. Luke Sutton, Head of Transactional Risk, Middle East and Africa at Marsh, joining us live here. Thanks for being with us.
Dubai Eye 103.8.
Join the conversation.